The World Bank on Thursday last week projected a very bleak outlook for African economies in the face of the increasingly devastating impact of the coronavirus pandemic, saying sub-Saharan Africa's growth will slump to all-time low of minus 5.1% this year, thereby pushing the region into its first recession in 25 years. According to the latest Africa's Pulse, the World Bank's twice-yearly economic update for the region, this sluggish growth trend is expected to cost the region about between $37 billion and $79 billion in output losses in 2020. Joining me now to give more insight into this report is the practice lead Sub-Saharan Africa Research at Docker Frontier, London, William Atwell. Good afternoon, William, and happy Easter to you.
You too.
Now, the World Bank is downgrading its growth outlook for Africa, which other countries are looking especially vulnerable and which are likely to make a string recovery after COVID-19?
So the markets that are really the most vulnerable in this situation are those that were already in a very precarious situation. So South Africa, for instance, was already in recession at the end of last year. And also those markets where they are particularly exposed to the double whammy caused by the fall in commodity prices as well. So they're hit by COVID-19 and all of that, all of what that requires, and the impact of it, and then also the commodity price down. So markets like Angola, Nigeria, of course, and some of the other commodity exporters like Zambia, Gabon, Equatorial Guinea, particularly exposed to this downward trajectory for SSA as a region.
Now, with commodity revenues falling, many countries will struggle to service their debts. For instance, Nigeria. Are we looking at a second Africa debt crisis here?
In some respects, that is looking more likely. However, the multilateral organizations as well as the SSA governments have been fairly proactive at looking at ways to try and mitigate that risk. So renegotiating debt repayments is something that a number of governments are looking at potential holidays in terms of those payments, potentially for a limited period of time. So hopefully we wouldn't see too many debt defaults, but certainly a lot of fiscal squeeze in a number of markets where really the revenues are falling quite considerably due to the commodity price downturn, but also, of course, due to falls in tax receipts due to economic activity really slowing down. So I think we're going to see certainly a fiscal squeeze in the coming 6 to 12 months, hopefully not a fully blown debt crisis in most markets.
Now, how do you see some of the steps African governments are taking to help businesses through this difficult time?
So there are a number of things we're seeing governments doing. Of course, it's uneven across the region, which of course is why it's very difficult to predict the full economic impact on each individual market because each government is doing slightly different things. But a number of examples that we're seeing in terms of interventions already are things like extended tax deadlines to create a little bit of breathing room for companies. In some cases, actually lowering tax rates. So we've seen that in parts of East Africa, for instance, lower tax rates, lower VAT, lower corporate tax rates, at least for a period of time. Also measures, so in South Africa, for instance, the government is stepping in to subsidize the cost of workers' wages and salaries, for instance, in certain situations. So those kinds of things are also easing some of the cash flow pressures that companies are facing. So with the aim really of trying to get them through the worst of the COVID-19 crisis and hopefully out the other side in a reasonable state.
Now, the World Bank is canvassing implementation by governments in the sub-Saharan Africa, social protection programs, including cash transfers, food distribution, and fee waivers to support citizens, especially those working in the informal sector. And we've seen quite a number of African countries do that. So what kind of model would you advise African governments to take towards achieving this?
Well, when you're working with the informal sector, of course, it's very important to be close to the market and close to the actual actors on the ground. So there, I think it would be particularly important to work very closely with local authorities, whether they are county or provincial or city level authorities, because they will know their own informal sector space very well and be able to identify the particular pain points, particular needs that are particular to that jurisdiction. So I think working closely with local authorities is going to be really key. Certainly a one-size-fits-all won't work in an informal economy setup.
Now, what lessons do you think African governments would learn or must have learned with this pandemic, and will that impact decision and policy making post-COVID-19?
So there are two big lessons here that I think are really important to take on board going into hopefully 2021, when things should start to improve. The one is the markets that have really suffered are those that have the largest debt burdens and are going to struggle to service those debt burdens. So I think keeping debt under control, very prudent fiscal management is going to be really key. So not taking on more debt than you can realistically service going forward and make you very vulnerable to external shocks, for instance. And the other is continued investment in the kinds of state apparatus that will make you more resilient in the future. So in continued investment in public health systems, and we've seen a lot of that across SSA, particularly in the rollout of universal healthcare programs, for instance. So that should continue. And also measures to help to try and diversify economies. So economies that are very reliant on exporting a single commodity like oil or copper, those economies are the most vulnerable. So if they can start to diversify away from that, more investment in manufacturing, services sector development, and more value-added activities, that will certainly make them more resilient going forward as well.
All right. Thank you very much for your time, William. William Artwell is the practice lead Sub-Saharan African researcher at Docker Frontier, based in London. And the African Union has appointed former Credit Suisse boss Tidjane Thiam and several other dignitaries as a special envoys to solicit international support to help the continent deal with the economic impact of the coronavirus. The envoy team, which was named by the AU chairman, South African President Cyril Ramaphosa, also includes former Nigerian Finance Minister Dr. Ngozi Okonjo-Iweala, former South African Finance Minister Trevor Manuel, and Donald Kaberuka, former President and Chairman of the African Development Bank. Ivory Coast-born banker Thiam left Credit Suisse in February this year after a scandal over the surveillance of another executive. The envoys will be tasked with soliciting rapid and concrete support pledged by the G20, the European Union, and other financial institutions. Thiam is one of several prominent Africans who has called for a standstill on debt to private creditors amid the outbreak of coronavirus, which threatens many African economies already facing headwinds from factors such as oil prices. And Tunisia has secured a $743 million loan from the International Monetary Fund to help counter the economic effects of the coronavirus. The loan will be extended under an IMF scheme to support countries during the coronavirus crisis. Tunisia has confirmed 643 cases of the virus and 25 deaths. The infection is hammering its vital tourism sector, which represents nearly 10% of gross domestic product. Tunisia has also received 250 million euros of financial aid from the European Union. The government now expects an economic recession, prompting the central bank last month to cut its key interest rate by 100 basis points, its first rate cut since 2011. And that's a wrap on the program. Thank you for watching. I'm Chimeze Obi.